Good morning. Today is Tuesday, January 31st, the last trading day for the month of January of 2023. And overnight, we have a bit of a correction going on in US equities. And of course, the highlight for this week is, of course, the FOMC meeting on Wednesday. And the result will be known at 3 a.m. local time, Singapore time, on Thursday. So technically, it will be on Thursday morning at 3 o'clock in the morning, in which the FOMC will reveal to us the amount of the quantum of the rate hike. Market has already priced in basically a 25 basis point or a 0.25% hike. And if the result is more than this amount, obviously it's going to be a negative for equity markets. And but most people already priced in almost 100% of market participants priced in a 25 basis point rate hike. So if the result is none other than that, it will definitely cause a lot of confusion and a spike in volatility. But more importantly is what the Federal Chairman is going to tell us right after the rate hike during his regular press conference after the FOMC meeting. So the market is trying to see if the Fed chairman remains hawkish and whether the language he used hint to a period of pause, which the market has also priced in, which actually is the reason behind the rally in equity prices so far this month. So if the language does not reflect this, that means the fight the Fed can is going to start to unwind their long position. Okay, so we will have to see the language that the Fed chairman Powell is going to use. So that will be on Thursday morning at 3 o'clock in the morning. Of course, on Friday, we have the all-important non-farm payroll. So towards the end of this week, you're going to see a bit of fireworks and the market is priced to go up. You can see the fast and the slow algos are all priming to go up. Okay, so I think this temporary slide as of what we've seen last night may extend another 24 hours into tonight's trading and maybe into the early part of Wednesday's early part midday. And that is about all, because after that I think the market is priced to go higher. I've already gone short the Dow Jones, and of course I'm already short the Nasdaq. So I'm just going for a short-term play to see how far this retracement is going to bring us. And I want to try to stay neutral and perhaps even go long right after the FOMC meeting going into Thursday morning. So do watch out. The market is priced to go higher. So we will have to see how the market reacts. Now, basically what we can see that overnight, the high traded at 34,164 was never revisited. This is the high last traded on Friday as of last week. And you can see prices started to come off. And at the end of last Friday trading, I did mention yesterday that we saw the emergence of a very small reversal pattern here, which is a shooting star. If anybody who knows about candlestick reversal pattern, that's a classical reversal signal, and that is happening on the 4 hours time frame. So this means that the Dow Jones itself is not that strong because it has yet to break into a month high. The month high is actually traded on January the 14th at 34,342.3. So far, the market has not been able to chart into a new high for the month, not to mention about to challenge the last December high, 34,712. So by and large, you can see that the momentum in the Dow Jones is beginning to wane. Okay, so will that affect the larger market outlooks? We'll have to see in other equity index. Over in the S&P 500, we also saw something, but the difference here is that the S&P 500 as of Friday has charged into the highest point this month at 4,094.2. Obviously, yesterday there was no follow through. And again, on Friday, we can see this similar pattern here being formed in the S&P 500, which is what I call a shooting star, which is the classical reversal pattern. And that may be one of the reasons, technically speaking, the prices start to ease. Okay. And of course, it came very, very close to challenging last month high of 4,100.96, but it was just that close. Okay, but so far we will have to see whether it will come back again. We shall have to see. Okay, over in the Nasdaq 100, we can see the similar thing. Nasdaq last Friday managed to charge all the way to the month high at 12,228.1, and it has already surpassed December high at 12,166. But this is actually very easy to cross because the entire move in the Nasdaq leading towards the end of last year has been lagging behind the Dow Jones. Okay, so last year towards the last 2 months of trading, we can see that the Dow Jones, when it started to recover, it led the pack higher. And this time around this month, we can see that Dow Jones is no longer performing the role. In fact, the laggard in the last 2 months of 2022 now is the leader in US equity recovery, because fund managers have been trying to repopulate the portfolio after the end of the year performance. I'm sure they would have already squared a lot of position, pocket their gains, and now they have to repopulate the portfolio, and they will go for those very depressed tech stocks. Okay, and that's the reason why the Nasdaq 100 has been leading the charge higher this round. Okay, so yesterday we can see that the pullback was also deeper in the Nasdaq, and again very similar. We saw on Friday closing on a 4 hours time frame the appearance of a shooting star, and it appears on 3 major equity index. So that actually reinforced the idea that the market is primed for a short-term decline, I mean a correction. So far we can see that the on the chart wise, if I draw this line here, you can see that this low managed to give us some sense of a support. So as we go into tonight's trading, we want to see whether this support line can actually hold the market. If it fails to hold, then we probably will see a much deeper correction, even the idea of topping out of this recovery. Okay, although the market has formed more likely a three-wave corrective rebound, but it has failed to hit its target at 12,400. So this is actually less than ideal, but it is after all managed to go beyond the December high. So technically, it has already fulfilled this three-wave corrective pattern, and is already primed for a resumption of the larger degree downtrend. Okay, so the danger is that there is a possibility market may have already peaked, but from what I have seen in the other chattering, it seems that a lot of people is of the idea that this market can actually go higher. Okay, so we will have to see the fight between the bulls and bears, whether in the new month in February, what will it bring. Okay, I do expect February the 2nd, which is towards the tail end of the month. We want to see what kind of movement. I do expect on February the 2nd a big move to happen, either in the reversal or some kind of catalyst that cause the market to actually have a directional change. So do watch out for February the 2nd. Over in Hong Kong, we can see Hong Kong market actually peaks out last Friday at 22,700. Yesterday, there was no new high. Market opens and then beginning to slide. This morning continue to slide. Actually, the correction in equity market started in Asia, in particularly in Hong Kong, because Hong Kong opened first on the first trading day of the week, and it have already shown us a weakness. So maybe this weakness may have influenced the US equity, and that may cause the equity markets in the US to actually also do the same as to pull back. Okay, so people are taking some money off the table. After all, this counter trend rally has been very robust. It's time to take some money off the table. So we are seeing continued weakness in Hong Kong this morning, and if the market can actually hold on to this support line here for today, I think the market probably will be looking at 21,200. If this level can actually hold, then maybe for time being we will not make a call that the market has topped out at 22,700. Okay, and over in Shanghai Composite Index, yes, on Monday we have a major move. After all, we remember yesterday I did mention last week was a shortened week for Chinese equity market because they were closed for the first 2 days of the week to celebrate the Lunar New Year. And on Wednesday, the market started to go up, and on Friday, as of yesterday, the market went up to 3,310, but it couldn't sustain. And today we see a pullback, which is actually have undone everything that it has done overnight. Okay, in yesterday's trading. So we are seeing a pullback here that is actually quite aggressive. For a time being, this market has already turned bullish because it has taken out the last August high of 3,308.35. Okay, so this new high here has changed the entire structure of this move here. From the low in October, this market now has turned bullish, at least on the daily time frame. Short term, I think the market may be able to find some kind of support at 2,212 to 2,225 that level. So we have to see whether the market can actually hold out here. Okay, over in the Nikkei 225, we see very little move. Market did not go new high, it did not collapse like the others. So there is no visible decline going on in the Nikkei 225 as yet. The high traded at 27,502 was actually traded last Thursday. So over the last 2 trading days, we have not seen any attempt to go higher. So right now, as we are speaking, there's a bit of a pullback, but it is nothing compared to what we saw, what we have seen either in Hong Kong or in the Chinese equity markets. So definitely we will have to continue to watch this. Okay. Over in currency markets, we see that the dollar yen has actually broken out of the falling channel. The market seems to be holding, has a bottom here at 125.5, and it does look like it wants to go higher because it has already clearly broken out of this falling channel. And if the market takes out 131.50, it will be the one first conclusive evidence that the market wants to gun higher, and the next obvious target is 134.80. Okay. Over in the euro versus the Canadian, over the US dollar, we can see the market continues to consolidate. There is no obvious downward move, but you can see the market has been trading below this midpoint of this rising channel, and that gives it a little bit of a bearish bias. And the high traded at 109.30, and this high was traded last Thursday. Like I said, over the last 48 hours, there was no new attempt to trade higher. So now I'm just waiting for confirmation that the market has possibly picked by seeing a move below this rising channel. If the market can close below this level, then it gives me the conclusive evidence that I need that the market here may have already picked at 109.30. That means the dollar is about to go higher, which is always been my my view. Okay. Over in the Aussie versus the dollar, if you have no currency pair to buy, maybe this currency will be the best candidate based on three factors that I can see. One is the firmness in commodity prices, and that should work out very well for Australian dollars, because after all, Australia is an commodity export economy, and any kind of rise in commodity prices should actually be beneficial for the Aussie dollars. And then we have gold prices, also very, very firm. When gold prices stays firm, it has always worked out in favor of the Aussie dollars. And of course, the most recent one was last week when you saw the CPI numbers for Australia came in higher than expected and remains very elevated. So it gives rise to the idea that the Reserve Bank of Australia will have no choice but to continue to hike rates higher, and that of course is beneficial to the Aussie dollars. So everything aside, based on these three factors, if you have no currency to buy, this will perhaps be one currency that there will be a good candidate for buying. Okay, but the market right now is beginning to pull back on some kind of correction that we are seeing in the dollar. The dollar is beginning to show sign of trying to rally. Later on, as we go in the dollar CAC, we can see the sign very, very clearly. And over in New Zealand versus the dollar, as yesterday, I told you guys that I wanted to look for levels to sell. There was no conclusive evidence, but we can see that this over here is a shooting star here. And before that, as the market went up to 0.65, this is an outside bar on a 4 hours time frame. That already gave me an idea that this market is possibly biased to the downside. And if anything, at the bare minimum, I think there's a possibility that we can see a three-way pullback, okay, to somewhere just about 0.636 to even 0.6315. So yesterday I shorted this. So I hope that maybe the market will give me something to celebrate. Not a major move here, but the market has been struggling for quite some time now. Now, sterling versus the US dollar has also been doing very similar to what we have seen in the euro dollar, and it has basically been consolidating. But the fact is, the market has been crossing in and out of this midpoint here, caused a bit of confusion. But right as we are speaking right now, the price action is below the midpoint, and that again give it a little bit of a bias to the downside. And I just want to see confirmation that it is coming down. Okay, so we will have to see how price will react going forward. Okay. And over in dollar CAC, okay, dollar CAC is the one most obvious one. Yesterday, when the market opens in Asia, the market went up to test the 133, broke it momentarily, but find no follow-through stop orders. The market started to reverse, and as of this morning, the market has obviously taken out the near-term resistance line, and this is technically bullish for dollar. That's the reason why I have been saying there are already signs that the dollar is about to reverse. And it is the clearest right now in dollar CAC. If dollar yen start to go up and take out 131.5, then again that will be double confirmation from two different currency pair, and that will give further conclusion that I think the dollar weakness that we have seen since last September probably has come to a significant bottom here. So we will have to watch development in the currency markets going forward. Over in crude oil, we can see crude oil continues to slack, and as of what we are seeing right now, market has gone to a new low intraday. Okay, we will see what is the new low here, to $77.57. Okay, and 57 cents. So this is the okay, $77.57 is the low so far, and market seems to be wanting to go down. You can see the market tried to go beyond $82.66, failed once, failed twice, and yesterday on Friday it conclusively broke the near-term support line, and this Monday itself it could not go back up again and slam back down, and as of now we can see the market have even take out the nearby support at $78.45 to trade at $77.57. So that means near term this could see a bit of weakness going forward. It's unfortunate because I'm beginning to see a sign of some kind of stabilization in the natural gas, which I think will be a catalyst for higher prices in crude oil. But seeing how crude oil is coming off, maybe it will postpone this potential reversal in natural gas. I've already gone long in natural gas last night because yesterday at the opening in Asia trading hours, the market gapped down and traded to a low. This is a low, a 10 months low. The market has been coming down since, or not 10 months, has been at least a 5 months low. Okay, the market actually peaks above $10 and he has fallen to $2.61. That is a big move with no significant rebound. So I think the market is so oversold. There's going to be a technical rebound anytime soon. So yesterday when I saw the market did not go to a new low in New York, I decided to go in and test the water by buying some natural gas, and we will have to see whether it will continue to go higher. Okay. And over in precious metal, nothing much really happened. Precious metal remains elevated. The high traded here at 1,949.16 was traded last Thursday. So over the last 48 hours, there was no new attempt to go higher, but basically the market is not collapsing. So it is basically holding on. Okay, I think the catalyst for it to move either way will come during the FOMC meeting, which is on Thursday morning at 3 o'clock Singapore time. Okay, or in silver itself, we see a bit of jumpiness in silver. Okay, silver first went down to $22.76, and that is on Monday itself, and the market ran back up again on last Thursday. This is last Monday. Market ran up to $24.29 on Thursday before falling back down below the resistance line. You can see that despite the prices went up above this resistance line on a close-to-close basis, it has not breached this resistance line here. So this line is still very much valid. Okay. Over in crypto, we can see that crypto is basically mimicking what we are seeing in equity markets in the States. Of course, US equity market has found a significant bottom last October and starting to rally, and it has rallied for 3 months right now. Okay, so obviously the market now is getting a little bit nervous, and we saw last night how US equity saw a bit of profit taking, and that profit taking scenario also is being mimicked in the cryptocurrency space. Here we can see Bitcoin on Friday, it went up to just under $24,000, and as there was no follow through in New York and the market came under selling pressure, this is basically profit taking. So for now, the market has taken out a minus support line, and now I redraw another line based on this morning low, and we will see later on in the day whether this line is able to hold the market. If not, then we prepare for another run down to 20,400. Okay, so this is the bottom that could be significant. Okay, so do watch out for this move here. Ethereum did not follow through like Bitcoin. There was no new high traded on Monday. Market high best was at $1,660 before it started to unravel together with the decline in US equity markets. So right now the market is holding just above the 1,520 levels. If you are very optimistic of further gains in crypto prices, if this is the case, then you take the 3-wave pullback scenario, and if the market can hold at $1,500 and can stabilize, that could be a launch pad for higher prices going forward if you are very bullish. Okay, over in Ripple, we are seeing very similar outlook here, possibly a 3-wave move, and there is a key support here at 0.3686, and hopefully this level can actually hold. For a time being, the market has taken out a near-term support line, so obviously the near-term is a little bit bearish, but by and large, this market is positive. We want to see whether it can hold out at 0.3686. Over in Cardano, we are seeing very similar move like Bitcoin. On Monday itself, it jumped up to a high of 0.399 before it moved back down. Now, this is a bit of a frustration here because this line here that we see, the resistance line, is 9 months in the making. This resistance line has been has been 9 months old. So he carries a bit of a significant. So yesterday when it broke above this line, I was actually quite optimistic that it will continue to charge higher. But by the end of closing last night, it went not only below this resistance and support line, it even went below the support line here. But of course, this is a very near-term support line. But by and large, it does give this market a sudden bearish bias. So if this is the case, maybe the market can stabilize somewhere around the 0.346 levels, because this, after all, the beginning of the perimeter, the outliner for market to actually hold. So if the market can hold out at 0.346, it may actually be a base for it to propel higher. We will have to see. Okay. Over in Solana, we see similar move. Market opened the week here on a very positive note to $26.79 yesterday morning, but it couldn't hang on. By the end of trading, it's already trading below the support line here, and it's currently trading at $24. The low traded so far at the low was $23.34. So will it continue to drop? There's a possibility. Nearest support is $22.20 to $20.40. So hopefully somewhere in between these two prices here, buyers will re-emerge, because overall this market is bullish right now on the daily time frame. So we will see whether it can actually hold up. So that's all I have for you for today. Remember, the important date for this month, for this week, is actually on Thursday morning Singapore time at 3 a.m. and followed by Friday non-farm payroll. In the meantime, take care and be safe. Bye-bye.